Hello and welcome to another episode of Last Orders. If you're new around here, like and subscribe, it helps massively. Also, if you are looking to learn some TA or brush up, we have just finished releasing our free TA course on this channel. I will link the playlist at the end of this video. So plenty to go through and digest. It's been a pretty crazy week and things look to be getting even more chaotic as we go into the weekend. So I'm going to start with the news and then we'll go on to the charts. Again, as I said on Monday, apologies, I'm on the small screen. I'm on the road traveling. However, we'll be back to normal next week, back on the big screen, back on the monitor. So bear with me just for today. So as I say, let's go into the news and we'll quickly go over what happened with the FOMC meeting on Wednesday. So this article is from Wolf Street, basically just because I was going through a few articles and this one was the best in terms of just having all the information in one place as opposed to jumping from between different articles. So go over the basically the highlights of what actually happened. So the Fed hiked the interest rates by 25 basis points as expected, so no surprise there. But then it was obviously the message that came after that. So I quite like this actually. I'll come back to that in a minute. Yeah, so FOMC raised its policy rates by 25 basis points as was expected, as we knew. And then, as I say, the statement afterwards, if you click on that, it takes you to the actual press release from the FOMC. But basically, the highlights is that ongoing rate increases will be. Some additional policy firming may be appropriate. So there could be a continuation of higher for longer, as we knew a couple of months ago. However, there was a lot of sort of rumours circulating and a little bit of hoping that there was going to be a pause or maybe even a cut in the rate hikes due to what's happening with the banking sector. But the Fed basically came out and said, reaffirmed that they would not ease up on their rate hikes. And actually, if we go to what's called the dot plot, this is where the members of the Reserve forecast what they believe will be the top end of the interest rate hike. So as we can see here, so 10, which was the medium number, expecting 5.125, with just one expecting below 5%. As you can see, the rest of the board expecting 5.375% or even higher, close to 6%, 5.875%. So we'll have to see what happens there. And then finally, tightening monetary policy while providing liquidity support for banks. So continuing with their quantitative tightening, whilst providing liquidity support for the banks. Not really sure if they're going to be able to pull it off. I don't really know enough, not really my area of expertise, but it doesn't sound good. It sounds like you're trying to balance too many plates, and it sort of goes back to that quote we had at the top: stepping on the brake with one foot while putting an arm around the baby to keep it from hitting the dashboard. Are they going to be able to pull it off? Are they going to be able to avoid the recession and things breaking? We're going to have to find out. But they are not stepping back on their sort of determination to get inflation down. They're not stopping the hikes. Higher for longer was basically the message. So we also had this morning, the last bit of news: Deutsche Bank is in trouble. Their default insurance hits a four-year high. So basically the premium to insure against default is rising. So European banks in trouble this morning. We know that on Fridays is normally the day where banks sort of come out and announce their troubles or announce that they're insolvent, etc., because it gives them the weekend to sort things out. So are we going to see more trouble at the close today? We'll have to wait and see, but certainly rocky times for the market. So what does that mean in terms of the charts? Let's go have a look. So BTC, higher time frame, as you see on the weekly, looking a little bit indecisive. If we go down to the daily, you can see that the FOMC day here on Wednesday had a big rejection from that 28.5k daily level, which we highlighted on Monday, and that is capping price at the moment. It was a very strong recovery, as you can see on the Tuesday, went straight back up, but again couldn't get past that 28.5k, so that is holding as resistance for now. If we go to the lower time frames, you can see the speed at the recovery. So dropped down, as I say, right on the announcement of FOMC, then rallied into the Asian session in the following day, but as I say, another rejection currently. So are we going to get that pullback down to 25k? We'll have to wait and see. Obviously the monthly, how long we got left? Just another week to go, so still looking like a very strong monthly candle. Do we see a bit of a retracement in the last week? Let's wait and see. Ethereum still battling with its own 1721 monthly resistance, as you can see. If we go to the weekly, you remember on Monday we talked about this weekly level, potentially capping price. You can see it's the start of this leg of the move down from the 12th of September and still holding as resistance, as you can see, coming to the close of the week now. If we go to the daily, again, apologies for the small screen, but basically just sideways chop, as you can see, since the beginning of the week. Price basically just hitting the highs and lows of the previous 4 days, so nothing really in terms of anything new. I am going to tidy up this chart slightly, get rid of those levels there, but yeah, the important thing is to see where we close this weekly level. Does this hold as resistance? Now, talking about alts, if we go to the ETH BTC chart, so you can see we've sort of stopped this week, although it's pretty indecisive. We broke that important weekly mid-range level. Now if we go to the daily, we've got a level here. If we just zoom out, you can see this level, very important day level, which I believe is going to be the next destination for ETH BTC, as you see down here about 0.06. If we zoom out and look left, very important level, you can see it was the bottom here back in October 21, had a pretty decent bounce back up to the mid-range, double bottom, and then went on a run all the way to the top of the range. And then also, if we zoom in here, it was also the bottom on the 27th of May, bounce, another small bounce in June, and then as you can see, when we got a close below, held as resistance, and then was the start of this big leg of the move down from the 10th of June down to that range low on the monthly time frame. And then even as we came back up, respected it as resistance before breaking through and then going on a run. So I believe this will be the next target for ETH BTC. So I think a little bit more pain for alts, down to 0.06, and then also for added confluence, if we take the monthly range low up to the mid-range, which is around 0.066, you can see that it's the mid-range there. So it's basically the quarter range of the entire monthly range. So interesting level there, a lot of confluence. I believe that's where we're going next. If we go to Bitcoin dominance, as you can see, still got a little bit more room to run as well. So as I say, potentially a bit more pain for alts, and I think if BTC comes down, then you're going to see you're obviously going to see alts follow it as well. Finally then, let's take a look at the S&P. So as you can see, sort of in the middle of this monthly range. Are we going to see it return to the range bottom? Because it's not really had that push up that you would expect to see if it was going to return to the range high. If we go to the weekly, you remember us talking about this 3963 weekly level on Monday, and as you can see, it had a really decent attempt to try and break through it, but as you can see, Friday morning and we are below it. Looks like it's going to hold as resistance. If we go to the daily, again, we had a very strong reaction to the FOMC, big dump. We tried to bounce yesterday, but as you can see, it almost completely retraced, and then as I say, today we are below that weekly level. So obviously the banking problems not helping the S&P either. And then finally, if we go to the DXY, which is the dollar, very interesting price action here. So you see this, we were talking about this weekly mid-range potentially being a higher low and holding. Didn't look good earlier in the week. However, we've tapped that weekly range low, had a decent bounce. So does this end up holding? Only obviously the rest of the day to go, about 11-12 hours. We'll see if that happens. If we go to the daily, you can see that strong bounce we had yesterday and continuing today. So very interesting spot. Does the DXY hold this support? Does ES get stopped at this resistance? BTC and ETH at their own resistances as well. Banking troubles, and as well for alts in particular, I think ETH BTC is going to take another trip down as well. So what's going to happen, we'll have to wait and see, but I think it could be quite a rocky weekend. So I would be very cautious going into the weekend. If you've got profits from buying lower down, not a bad place to take some. Of course, as we always say, you don't want to be fully in or fully out the market. When you say take profits, doesn't mean sell the whole bag. Just take a little bit off So then if we do go lower, say if we do get this retracement back to 25k, you've got more money to buy more units. So hope you enjoyed it, guys. Hope you have a good weekend. Hope you had a good week. Back to normal on Monday. And as I say, if you're interested in learning some TA, we've got the playlist up and running, which I'll link at the end of the video. So as I say, have a good weekend, and we'll catch you Monday morning.